Okay.
And I was just going to give you a quick introduction. So
Sure. Okay.
thank everybody for coming out this afternoon. I wanted to introduce Paula White with Atlantic Coast Mortgage. Paula's fantastic. And you guys are in for a treat. So Paula, I'm going to go ahead and hand it over to you. That should be good to go. If you have,
Right, left.
yep, right, left. Move
Oh,
forward,
are
backwards.
we recording that?
Yep.
Okay, awesome. Great to meet you guys. I'm really excited to be here today. Thank you so much for letting me come and speak to you guys about renovation loans today. I really appreciate the opportunity to do that. Your market center is gorgeous. And I can tell you that you guys are the talk of Northern Virginia. Did you know that?
Oh, in a good way?
Yeah. In a great way. I mean, if it wasn't a good way, I might not have said anything.
Right.
Before we get started today, does anybody wish to take advantage of the 1 hour of CE that's being offered for this class? Okay. Okay, awesome. So just so you're aware, I would do this for you for free if I was allowed, but D4 makes us, and I mean makes us, collect $10, okay? So if you want CE credit for today, all you have to do is fill out this form and give it back to me by the end of class with $10. And you can do cash or check. Unfortunately, we don't do credit cards, but if you want to write a check, you can. You just make it out to Atlantic Coast Mortgage, okay? Do you need a CE? No? Anybody else?
Right, you're here. You might as well.
Yeah, you might as well. You never know. And then that way you'll be grateful you had it. And you don't have to worry about it in case something comes up later and you didn't get an opportunity to take another CE class. But at any rate, okay. So how competitive is the market here? I mean, I know the answer, but I want to hear it from you. How competitive is your market? Depends.
Yeah.
Okay, what does it depend on? Location. So you have certain pockets of your market that are more competitive than others. Do you feel like the renovation loan might be able to help you with that? Are houses that are not quite turnkey sitting a little bit longer, which maybe a buyer might be able to take advantage of if they're not really able
100%.
to get really crazy with their offer?
Mhm.
And what I mean by crazy is, have the ability to pay any appraisal difference, feel comfortable waiving the financing contingency, all the things that we have to do in our current market in order to position our buyers to help them win. Do you agree with that?
Mhm.
Okay, so that's what we're going to talk about today. Before I move on to the next slide, though, I would like to introduce myself since some of you in here don't know me. My name is Paula White. I'm a Senior Vice President with Atlantic Coast Mortgage. Todd Call happens to be one of my loan officers that I am blessed enough to have recruited over to Atlantic Coast Mortgage, and his primary function is to serve all of you. So in case you haven't had a chance to meet him yet, he's right here. We also have some pretty cool little fun facts that I put around the food table in there about him. But I'm gonna let him, so I'm gonna let him and Gina just come on up here and introduce themselves really quickly, if you guys don't mind, just in case someone hasn't had a chance to meet you yet. Hey, how are you?
I'm good.
Good.
Keep on Zoom for you.
Gina Harrison, I am Todd's loan officer. We worked together for, I think, 4 years.
Yep.
And we both been in the business for
Forever.
ever. And Todd's been a loan officer the whole time. I was an underwriter for many years, and then he convinced me to go over to the sales side. So I been converted.
Said yes.
Yeah.
So are you saying blaming him or thanking him?
A little bit of both.
Depends on the day.
Hey everybody, Todd Cole, good to see you again. I think I've seen some of you and met a few of you. Been in the business about 20 years and happy to be here. And I thank you for everybody for the warm welcome. Everybody's been very nice and it's been enjoyable to get to know a lot of people. So, but if you got any questions, concerns, anything, any mortgage stuff, just feel free to give me a call. I'll pass out some business cards. And this is a good product. It can help you sell an extra house a month. So it's a little niche that you can use. So thanks, Paula.
Sure, absolutely.
Yep.
Okay, did everybody get raffle tickets before we get going? We're not giving away like a new car or anything like that, but it is a way to kind of make things a little fun. So if you didn't get tickets, let me know. I'll make sure you get 2, and then at the end of class, we'll go ahead and do the drawing, okay? All right, so like I was saying before, we do have a very competitive market, which is where a lot of these renovation products are coming in handy, whether you're a listing agent or a buyer's agent. you can take advantage of these. So some of the ways that we can help you with this loan, try to sell more houses, like we were talking about, being a very competitive market. And if we have someone that can't quite position themselves to be very competitive to get a turnkey home, then maybe what we could do is show them how they can get a home in a less competitive environment and make it something really special, okay? It's not as hard as you think it is. A lot of the time when I do renovation classes, people get scared because there's extra steps, right? We have to have a contractor involved. We have to have a vision of how we want the house to be. We have to know exactly what the buyer, sort of their A list and B list are, because we don't have an unlimited budget. Because whatever the renovation costs will be, they'll be added to the loan, so we have to qualify for that, right? Sometimes there's one situation we had in KW Manassas where there was a pretty newer agent. They went out, the client went under contract for the home, and then the home inspection was for void only, but it disclosed a tremendous amount of items. And so at that point, we were like, you know what, if you still want to buy the house, let us convert you over to a renovation loan. Okay. So we were able to then go ahead and say, hey, you didn't apply for this, but you qualify. So let me, before you just end this, because I think it was actually void only, not information only, but before you end this, you know, which is something we see a lot in the competitive market, right? People are not being able to do home inspection contingencies or any contingencies at all in some cases.
Just so you're aware, our contracts are very different than Northern Virginia. We don't have a void only for information.
Okay, so how does yours work then?
It's you
I'm so glad you said that.
we either waive inspection or indicate that it's for informational purposes only,
Okay,
but those are our terms here, so it may be a little different.
so the only one missing is the void.
Correct.
Okay,
Yeah.
so you're either doing info only or you have the contingency. Okay, so for informational purposes only then, that would be their equation of, or what's equal to you here. Right, so we were able to say, hey, you know, before you end this, let's talk about how we can make this work. So it only took about $40,000 really to make that house the way that they really wanted it to be, and I've never seen anyone happier. So that's a great example of how this loan could come into play. But if you're a listing agent and you want to put your listing agent hat on for a second, if you're a listing agent and you go in and you see a house that maybe needs some love, some updating, things don't always have to be wrong in order to use a renovation loan. You can just want to improve it. You could just want to update it. You can just want a different layout, right? People want to be able to make things their own, and that's okay. Okay, so we have 4 different renovation loans that we do at Atlantic Coast Mortgage. We don't have enough time today for me to go through lots and lots and lots of information on each one, but what I would like to do is give you an overview of how each one can work, and we're going to talk about one of them a little bit more detail because it's the most widely used and it's the easiest one to use, which is the home style. Okay.
Oh, there you go. Should
Got it?
Yep, you should be good now.
Okay. All right. So basically the way that renovations loans work is we can't stick build a house from the ground up with a reno loan. That is a construction loan. Okay. So anybody that doesn't know the difference, just so you're aware, they are 2 completely different things. So if someone comes to you and they say, hey, I have a lot, or they want you to represent them in buying a lot, and they want to custom build a house, we can help you with that too. That's just not part of this class. Okay, just so you know what the distinction is. Okay.
We'll have to teach that class next.
Yeah, renovation is our construction is easy. We do a 1-time close and a 2-time close. We are going to talk about that today because you can use that same loan to renovate. Okay, we're just not going to expand a lot on actually stick building the house. Okay. Okay, so basically the way this works is there's 3 stages of the process. So you guys work with a buyer or you work with your listing, right? Because if someone's house, if they want to sell and it's dated or it's in disarray, you know, you guys are the professional. You can look at the comps and say, hey, you know, if you were to just put $30,000, $40,000 in this house, you could get X. These loans are available on a refi. So if you wanted to refer them to us as a listing in the future, your future listing, and have us go ahead and put them into a refi and get the renovations done. And then of course, once the house is sold, the loan would be paid off. We could do that as well. Lots of people do that because obviously it has a greater chance of getting a lot more money. And so we just have to weigh it out, what the cost is justified by the value and whether or not that's a thing for them. But that's another way that we can certainly utilize this. And then if your seller or your possible seller doesn't want to refinance and go through those costs. They might just want to end it. We can help you market that house as a renovation loan house, okay? Whether it's open houses, whether it's marketing materials in the house, whether it's some sort of an individual presentation on social media, we have access to all of that. So I just want you to understand first and foremost that I'm definitely not here today to teach you guys how to be loan officers. That's our job. But I certainly want to make sure that we talk about how we can use some of these tools and resources actually in the day-to-day so we can all close more loans, more buyers, more sellers. That's really what this is about, okay? Okay, so how does this work? Well, the financing contingency does not have to apply on a renovation loan if it is not a one-time close or a two-time close. And the distinction there, which we'll get into, is one-time close and two-time close are actually construction loans that convert over to permanent financing. Okay, so when we say one-time close and two-time close, essentially that is a huge renovation project. Okay, that is a massive one. And a great example of that is one that we did recently where we had a house that was built in 1908 that somebody really, really loved, wanted to purchase it. It was so bad off, I think the county was considering condemning it and disconnecting the utilities. The people that wanted to buy it, we did a one-time close renovation loan because the renovation was so extensive that the total amount of the renovation exceeded the sales price of the house. Okay, believe it or not, that happens. Where somebody really wants a specific thing and it's speaking to them and it might be their end game. Or for you as a listing agent, if somebody came to you and said, let me sell this house, this is a great way for us to market it together. But the one-time close and two-time closes, I strongly advise we don't waive any contingencies on those unless we've already gone through our Approval Plus program. So for those of you that don't know, Atlantic Coast Mortgage has an Approval Plus program where we can take the buyer and we can go to underwriting and we can get an underwriting commitment pending a house. We don't have to have a house for that. Okay, so under those circumstances, if we already have a financing commitment, you go for it. But the one thing about a renovation loan that does get to be a little bit more complex than a traditional sale is the appraisal. So that part we have to talk about in terms of what the comfort zone is on waiving that or not. Okay, and the reason that that's complex is because we're ordering an appraisal. You guys have a contract for a certain purchase price. And then we're going to put renovations on top of that, hypothetically, right? So when we order the appraisal, we have to give them the contract and we have to give them the reno budget from the contractor with a detailed list of what they're going to do to the house. So the appraiser is going to turn in one appraisal report, but it's going to have two values on it. It's going to have an as-is value as the house sits right now, because your contract price still has to be validated, let's say. And then it's going to have a subject to value, which is, hey, if you do in fact do all of these things as this contractor has described, this is what the end game value is going to be. And both of those values are on an appraisal, and we have to have both. So that's why it gets a little bit more complicated when it comes to talking about appraisal contingencies and being comfortable waiving those. I definitely on a renovation loan would suggest that we never do that, okay? So certainly that would be something to consider. But we could talk about all kinds of things. We could talk about houses that are on well and septic being put and plugged into the public system. We can talk about renovation repairs, but we can also just, like I said before, talk about people that just want to make things their own. Any of that is applicable to a renovation loan. Okay. Do you guys have any questions about this before we move on?
Is there a max amount of value?
It depends on the loan. So when it comes to true construction loans, which is our one-time close, two-time close, no. When it comes to a home style, which is something that is probably, in my opinion, the most user-friendly, easiest, more common renovation loan, yes, it's actually 75%. So you can have a purchase price with the renovation budget exceeding the purchase price and still be able to do that. The only one that you're really capped is the FHA 203K option. Okay, so we're going to touch on that loan today too, but the 203K is an FHA loan. It can only ever be an FHA loan. And there's two of those, two different programs that FHA offers. One is called a streamline, which is a minimum of $5,000, maximum of $35,000, regardless of the price, okay? That can be added on to the sales price for a renovation budget. Or we have what we refer to as the full-blown 203K, which does not have a cap, but it's way more involved and it's a lot more expensive. So for the most part, no. For the most part, if someone really wants to make something special and the renovation budget's really high, we more than likely could accommodate it as long as they qualify. It's only the 203K streamline that has limits. Okay? The conventional options allow luxury items like pools, things like that. 203K does not, just so you know. FHA is a little bit more strict on what can be included, okay, compared to what Fannie and Freddie will tolerate, or in this case, Fannie Mae.
So how is it determined which appraisal value is used?
But we use both.
So you use.
You have to check both boxes, right?
Okay.
So to speak. So you have your purchase contract that comes in, right? You've agreed to, and your buyers and sellers have all agreed, just like you would normally in a traditional transaction. And then the only additional component to that's going to be what the contractor says he's going to do for the house, right? And a detailed list of that. So you have one appraisal, but you have two values. So the appraiser is going to put an as-is value, which is as your contract sits right now. Let's say that's 400,000. That has to be 400,000 in terms of value. And then the appraiser is going to add a little piece there that says, okay, subject to the contractor being able to complete all these things exactly the way he says he's going to, that's going to be the value once that's done. So the subject to verbiage is subject to completion of these items. The value will be this. So we have to have both, because the loan is based on the price and the contractor's items, right? But you do have to make sure that you check both those boxes.
And when you follow closely that those updates or changes or whatever do get completed.
And that's a great point, because it's not just about getting completed, which we do verify that,
Right.
okay? And keep in mind on these loans, all of the construction components happen after closing. So your seller gets paid and they're out of the way, right? And so what happens is we come up with a draw schedule before closing, okay? And so we take the contractor's list of things he's going to do, just because it's easy math. Let's just say it's 100 grand, right? So if it's 100 grand, we're going to say, okay, at closing, the contractor gets the first draw so they can get started along with paying off the land or paying off the seller or whatever's applicable. And then there may be one or two additional draws that go on after closing. We break up what the contractor is going to do so that they have to finish a phase. We inspect it before we give them the next draw. And the reason for that is just to protect the buyer, right? We don't want contractors running off with people's money. If we gave them 100 grand and they left, we don't have anything holding over their head or any funds left to allocate towards someone else to actually get the work done. So the draw schedule sort of keeps them honest. I hate to say that, but it really is a thing. We've seen that happen before, unfortunately, where people have been stiffed before. So there's certain rules and regulations in place to try and prevent that from happening. But also, too, we want to make sure that the buyer's getting good quality work. So if we have a third-party inspector go out and inspect and make sure that it's being done properly, then we can feel good that the buyer's going to be happy with the end result. Does that make sense?
Yes.
Okay, perfect.
So are there certain contractors that would do the work in these situations?
No.
That you can just use any contractor?
Yeah, I mean, FHA 203K, they used to be very picky. They used to keep their own approved contractor list, and we would have to go by that list back in the old days, because 203K loans have been around as long as I have. So, you know, those have been around a long time. There are rules on do-it-yourself. Okay, people that are contractors themselves that might want to participate in building their own or renovating their own, that's a problem. Okay, that's something that we'd have to look really close to if it's allowed for the program. But the other thing too is that on the conventional side, there is some builder documents or contractor documents that they have to complete. They have to give us an insurance policy and I believe tax returns, right? Yeah, so we don't have like a pre-approved list, which is actually, you wouldn't believe how complicated that gets. Back in the day when there was a pre-approved list, that was a problem because everybody would go to the same people and then, they would be backed up and they wouldn't be able to move as fast. So there is as they come in, each person or each contractor can just follow the steps and be approved for that transaction. Mhm.
Is there a limit, you may have mentioned this.
That's okay.
Is there a limit to the amount that they can add to the loan for renovation, like is there a cap?
Yeah, so FHA streamlined loans cap it at $35,000 regardless of the price, okay? FHA conventional Fannie Mae home style, which is my favorite one. We're gonna talk a lot about that because it's just so easy to use. That one is capped at 75, just the renovation budget is 75% of the purchase price and or renovation costs added together, right? Or whichever one is less, 75% of the end value once all the renovations are done. So that becomes a little bit more complicated, and I'll show you guys sort of how a rule of thumb would be to make sure that you're within those rules. Other than that, one-time close and two-time close, there's no limit. Just what the buyer qualifies for, right? Because they still have to qualify to buy it.
Is there a renovation loan for VA? Oh, go ahead.
That's okay. Go
Is
ahead.
there a renovation loan for VA?
So the way that works is we would marry that with a two-time close construction loan. So we would do a construction loan to get the renovations done and or to build the house. And then once it was done and we had an occupancy permit, if it was required, they would go on and then sign on the permanent financing, which could be VA. No USDA. Go
I
ahead.
don't know if I missed it, but,
That's okay.
I know at one time with 2 or 3 days, they had to have a certain amount of mechanical issues wrong with the property before they qualify.
No, ma'am.
They qualify. Can it go beyond just your cosmetic stuff?
No, streamline 203Ks, you can do a lot of cosmetic stuff. As a matter of fact, it can be all cosmetic,
Okay.
okay? Yeah, you can do new paint, you can do new carpet, you can do new flooring, you can do new appliances. 203K streamline, the maximum is $35,000, so you're not gonna get too far with that. You might be able to do some sort of a renovated smaller kitchen. And there are some rules as to luxury items. They're not gonna allow for a hot tub, they're not gonna allow for a pool, things like that, okay?
I imagine that renovation,
That's okay.
that renovation list is sort of locked in, you're not able to kind of change the business process.
Well, you can, because as part of the renovation process, we build in something called a contingency reserve. So what a contingency reserve is exactly what you're saying. Or let's say we get into it, because we don't know what's behind the walls. We don't know what's under the floor, right? So let's say we all move forward with a renovation loan and we build in what we call a 10% contingency reserve. So if it's, $50,000 in renovation, that would be $5,000. If it's more than that, whatever it is, we like to try to do somewhere between 10 and 20%. If we're using a loan program, that gives us a little bit of leeway. Because there are surprises sometimes. Not only that, sometimes people change their mind. And once you've already, keep in mind, like we talked about before, all this is happening post-closing. So going back and adding more money to the loan is not a possibility. So we have to work within what we've already agreed to and committed to, because the minute it closes, they're paying for it, right? So we want to get it done quickly, but we also want to make sure they're happy with it. So we build in a little bit of a contingency reserve in case there are some unforeseen issues. We have that money available. And then keep in mind, they have closed, they have borrowed it. So if everything goes well and there's no surprises, we get to the end, that contingency reserve just gets credited back to the loan. Okay, got it? Okay. Anything else before we move on?
How does that apply to structural damages? Like, if you had the house and it was one, it's like $50,000 just to take care of the house.
You could absolutely do that. The only one you can't do structural is a 203K streamline, but you can on all the other ones. Okay, so yeah. I mean, I don't know, how many people like to go to the beach? Have you guys ever been to Outer Banks?
Yeah.
Okay, one thing in Outer Banks is they move houses all the time. Did you know? Yes, I don't know, I'm probably showing my age, I'm probably showing my age, but have you ever seen the movie Nights in Rodanthe?
Yeah.
Okay, with Richard Gere and what's her name? Diane somebody?
Lane.
Yeah, is that her? I can't remember. Yeah. Yes. So I don't know if you know that, but yeah, Nights in Rodanthe. Rodanthe is a small town on the Outer Banks, inside of the Cape Hatteras National Seashore. I actually owned a renovated house there, but the reason I mentioned that movie is because the house used to sit right as soon as you went into Rodanthe, the house that movie was shot in used to sit right there. Due to erosion and storm, it was about to fall. The water was gonna take it over. And some couple that saw the movie and fell in love with it and I guess could relate to the story, bought the house and moved it. And so there is a Nights in Rodanthe house where that movie was shot that was moved to a different location. And you can rent it, actually, in case you're interested in that.
All right, give everybody 2 seconds.
Yeah. You can rent it. I think it's actually called the Inn in Rodanthe. I can't remember, but that is the house where that movie was shot and it was moved. The reason I mention that is because I happen to have a Charlotte, North Carolina office. And because they're in Charlotte, North Carolina, they do a lot of beach properties, but they also do a lot of construction. Their market is just big on construction and renovation. And we have actually done some renovation loans and some construction loans that involved picking it up and moving a home, which is pretty cool. And I didn't mean to get off track, but that kind of reminded me of that when you said structural, because you're literally picking the house up and you're just moving it and working out structural, supports for it when you get there, which is pretty cool. But anyway, okay. Okay, so acquisition is a fancy way to say how you're going to buy the house. I'm not going to spend a lot of time on this except for to say this. So a lot of people think when you do renovation loans, you got to have a big budget. That's not the case. If you do a home style renovation, that is a loan through Fannie Mae. The down payment requirements are the same, whether it's a renovation loan or whether it's not. So if there's a first-time home buyer, or at least one applicant is a first-time home buyer, they can get away with 3% down. Okay, if they're not a first-time home buyer, or there's not at least one applicant on the loan that's a first-time home buyer, the minimum is 5% down. Up in Northern Virginia, we have something called a high balance. You guys don't have that here, right? So what's the conforming limit? It's 7 something? Yeah, that's it. So you can do, as long as you're within the conforming limit, which is, I hate to say again how old I am, but guess what the conforming limit was when I started lending? Lower. It was 302. It's so crazy. So things have changed, but at any rate, you really just need the down payment and the closing costs. And if your house has been sitting and it's not been up, maybe the seller would agree to contribute towards that. Okay, so that's pretty cool. So what do we need? We need a ratified contract. We need to have some sort of a contractor agreement with the contractor on what they're going to do and how they're going to do it and what it's going to cost, right? Drawings and specs, we don't really need that unless we're going through some major stuff, like what she was talking about with structural things. Okay, if somebody's just going to, update some bathrooms, change some flooring, repaint the house, maybe put in a fence, maybe dig a pool. You might need structural plans to get it approved through the county. But there are renovation loans we do that don't quite require this much work to it. Just depends on what's being done to the house, okay? Okay, so we can do a maximum loan to value of 95, we talked about that. There is a 1-point mandatory construction fee that we have to charge. Okay, and the reason for that is does anybody in here not know what a point is? I don't know how new some of you are. Do you all know what a discount point is?
Explain it, 'cause we have some new people.
Okay, yeah. A discount point is a percentage of the loan amount. You guys work in sales prices. We do loan amounts, right? So basically it's 1% of the loan amount in terms of a fee that gets added on to the closing costs in order to be able to facilitate this. And why that is just because it costs us a lot more to do that. We have a draw management schedule, we have to do inspections, and we have somebody that has to support this process post-closing. So all of that goes to fund that, to be able to support the program, okay? All right, so now here's the nitty gritty. Here's the different types of renovation loans that Atlantic Coast Mortgage does. Home style renovation is my favorite. That is a conventional loan. So if you are in a competitive situation and you still want to take advantage of the renovation loan, you can be competitive. It's a conventional loan. Okay, whereas 203K is an FHA loan. It can only ever be an FHA loan. So you're not going to be as competitive with this. Okay. As we mentioned before, we've got a streamlined 203K up to 35,000. The minimum is 5,000. Okay, so the minimum we can put in the loan is 5, max is 35 on this particular one. Then they have what they call a major renovation project, which is a little bit more extensive. That's going to allow way more than $35,000 to be put in. But the point is both of these, anytime you see this number, this is an FHA loan. Okay, so from a competitive perspective, that might be hard. But what other perspectives should we be concerned about when we try to recommend FHA financing? Do you guys know? FHA mortgage insurance is for the life of the loan, right? They still have to pay that, whether it's a renovation loan or not. FHA mortgage insurance is what we call a split premium. That means there's a big percentage that is financed in with the house. And then there's also a monthly component to that. And the only way to get rid of it is to refi. Now, rates went down this week. I didn't hear any cheering. Rates went down a little bit this week. Sometimes it's like watching paint dry, but we did get a little, I mean, things are really starting to move. I don't know if any of you have 401ks, but your 401k went up and your interest rate went down. So if you're a real estate agent, that's a win-win big time. Hopefully it'll stay that way. We'll have to see what happens when the Fed meets next week. But one thing to consider is if FHA buyers are using FHA financing because that's all they can get due to credit score differences, due to other factors in the application that mean it can only be accepted FHA compared to conventional, do it. Do it. It's better than renting. Do it, right? We can always refinance them next year when the rates drop. That's where the saying, I think, comes from, marry the house and date the rate. I kind of feel like we should say marry the house and date FHA because you're dating FHA. No one wants to pay mortgage insurance for 360 months, right? I mean, where you see the real cost of that in the closing documents is the APR. I don't know if you guys go to your closings and you kind of, Gina's like, the interest rate might be 6.5%, but the APR might be 8%, right? The annual percentage rate factors in things like mortgage insurance and closing costs. And when you have to pay that over 360 months, that number is really big. What the APR number is designed to do is show the buyer the total cost of the loan. So we don't want them to pay that. We just want them to become a homeowner, right? And then Todd and Gina have a great process in place that they're going to be able to keep track of that buyer. So we can refinance them out of it as soon as it makes sense for them to do that. Okay?
Part of going like a multifamily?
Yes, ma'am. 1 to 4 unit. You can actually use this project to turn a house into a multifamily.
Oh, I like that.
That's on our slide. We're getting to.
Yeah, the big opportunity.
Yeah.
For those in the museum district, exactly.
Yeah.
And if they live in one of the units, it's a primary residence, which is the cheapest
Right.
financing. Okay. So that is on one of these slides, but you're so good, you beat me to it.
I'm sorry.
Don't be sorry. Don't be sorry at all. Don't apologize for being good. Yeah. Okay, any questions on these before we keep going? No? All right, we're good. Okay. All right, so real quick, like I said before, I'm not trying to turn you guys into loan officers. That's what we're here for. But this is just kind of a quick cheat sheet as to what you can do. So we talked about our first-time home buyers being able to put down 3%. That's amazing. We do this also on jumbo loans. So if we have to go above the conforming limit, somewhere in the 800, 900, $1 million, that's fine. The loan to value is going to be less, but we can still accommodate that. We've got health, safety repairs, optional repairs, structural repairs, and luxury items. We can accommodate that on a conventional loan. Somebody wants to build a pool, somebody wants to do any of that, we can help them, okay? Especially in situations where people want to do these things and they jump the gun. Okay, so what I mean by that is no matter how much we tell them, don't apply for new credit, don't spend large amounts of money. you know, sometimes they get a little ahead of themselves and get over their skis, and they might go buy furniture, and they also might go hire a contractor to build a pool or a fence and put a deposit down. And then we end up having to go back to them later and get updated bank statements, and we see that the amount of assets are no longer there that we hung our hat on when we approved them, okay? So this is a good way to get around that and keep them approved and keep going, okay? Property types 1 to 4 units, townhouses, and we can even do this on condos. So if there is a condo, you tell me, are there a lot of condos in this area?
Yes.
Yes, okay. And so if we want to update and make them pretty, we could definitely do that. We've got 3 to 5% down, 3% concessions, seller subsidy with 5% down. 6% seller concessions with 10% down, and 9% with 25. All investment properties, which you can do this on an investor, by the way, it's primary residence, second home, and investment properties. All investment properties, if they get seller concessions, regardless of the loan, are capped at 2%. Okay, do you guys?
Did I hear you say that?
What?
Okay, so for an investor, you're saying they don't have to put down the typical 20?
No, they do. This is seller concessions.
Seller concession.
So if the seller's gonna pay
But
towards
they're
their
still
closing
way
costs,
higher.
it's 2%.
Right? The seller concessions, how much, I can't read.
That's okay. Investment property is always 2% seller concession,
Okay,
okay? No matter if it's a reno or not.
gotcha.
If it's a conventional, it can only be conventional actually for an investor. Then they're capped at what the seller can contribute towards their closing costs at 2%.
But if
Doesn't
it's
matter.
under occupied,
Mhm.
then.
Then it goes up based on the down payment amount, which
Right.
this is the same, by the way, as a regular conventional loan. It's not just for renovation. Okay? In this market, I don't think we're gonna get 6%. But keep in mind, I wouldn't ask for anything you don't need.
Right,
Because if you ask for things you don't need, what happens? What happens if you have higher seller concessions than what we've used? What happens to that money at closing?
Oh, it goes away.
Where does it go? Back to the seller.
yeah,
So if you're representing the seller, you're smiling because your seller's walking away with a little bit more money. But if you're representing the buyer, how upset do you think they are that they negotiated closing costs that weren't used? Right, now how can we use it up? We can buy the rate down. We can pay advanced HOA fees, advanced condo fees. We can do 2-year warranty instead of a 1-year warranty. I mean, if someone is getting to the table, right, they're getting that far, they're all the way through, and they're getting to the table, and they've got extra money that the seller's walking away with, shame on them. Because we can really use that money. We could buy the rate down. We could do all kinds of things, right? So we just have to be paying attention. This is just showing you what the most is you can get based on the down payment of the buyer. Yes, ma'am.
But on that, years ago, I had arguments on my particular closing precedent. When you write that contract, ask for seller's concessions,
Yes, ma'am.
you can't just write it towards the closing costs. Closing cost points in or prepays in order to use it for the arbitrary closing costs.
I see.
And this is the purchase.
Mhm.
Also to add, I always add, any other costs associated with the home. Yeah.
Okay, yeah. Another thing too is sometimes we end up, like I mentioned before, suggesting a renovation loan at the time of a home inspection. Okay, so if we're doing a renovation or we're not, if you guys are negotiating seller concessions in lieu of doing repairs, you have to make sure that you're not providing the home inspection or anything referencing the home inspection to the lender. Now, when you send that to this group, they're very well aware of what can happen in underwriting and how sky high that loan can blow up if things like that were to finally get that far. So if you were to accidentally send something to Todd or Gina and they saw that underwriting doesn't need to see that, they would not send it. Okay? Thank you, dear. But if you, but you have to be able to write your credit just towards closing costs, right? And make sure that you're not exceeding the limits. Because these limits are not just from the seller, it's actually from everyone. So if there's an agent credit involved, and there's a seller credit involved, and there's a lender credit involved, all of that together has to stay under the limit. Okay, and it can never get to underwriting that those credits are for instead of something.
Yeah, don't put that in your contract.
Yeah. Yeah.
Well, the contract, you have to rewrite this.
Yeah.
Yeah, but this group is experienced enough to catch that. But we would rather you know ahead of time so that you're presenting it correctly. Because as much as we would love to do all your buyer business, I realize we can't sometimes. Because your buyers are married to somebody for whatever reason. And so you have to know that, because that loan officer and that assistant may not be as experienced. And I've had to do that. We just recently rescued a loan from Wells Fargo that was a VA loan, that somebody thought it was a good idea to give the home inspection to the underwriter. So what do you think they did?
Oh,
They said, we want everything fixed in here or we can't close the loan, right? So you just have to be very careful of what you send to who and what you're trying to negotiate and what purpose it's for and who gets that information and who doesn't, right? Okay. All right, so we can do a purchase or rate and term refi. We can use a general contractor. What does this say? No self-help.
DIY.
No DIY. Now, if your client wants to include appliances and they're getting them from Lowe's, we have no problem with that. Okay, but we can't let, Todd, who's been a contractor doing his own thing, we can't give him $100,000 reno budget for him to do it himself. That can't happen. Okay, we've got 50% of materials distributed at closing. So let's say that our total renovation budget is 100,000. Let's say 50,000 is labor, 50,000 is materials. Half the materials go to the contractor as their first draw at closing. So that in that scenario would be 25,000 to get them started. Okay, and then we move from there. Based on the kind of progress they're making, I will tell you, this is kind of a sticking point. I've done a lot of these loans, and because you're only giving the contractor half of the materials, and then he's got to finish the entire project before we pay him the rest, sometimes they don't want to do that much work without more money. Okay, so we will work it out with them. We will do our best to work it out with them. There is a conference call that we do with the buyer and the contractor, and I believe the construction person post-closing, right? Just to make sure that everybody is in line and everybody has the right expectations. And we do talk about the draw schedule at that consultation before we get to closing so that everybody's happy and there's no surprises. Okay? Any questions about this? Yes, ma'am.
I addressed this earlier. When there's work involved that requires permits, do you require that the permit is inspected and closed prior to draw being released?
Yes, so usually the contractor handles the permits.
Do you require
Yes,
verification?
yes, ma'am. We have to, absolutely. And if there's an occupancy permit that has to be issued, we require that too. Okay. Anything else? Okay. Okay, so allowable improvements. Let's talk about this for, this is just focused on home style because this is the one we do the most. There's really not very many exclusions, but what I love so much about this is all the different things that people don't think they can include because they feel like they're small, which I'll be honest with you, if you paint, if you add flooring, if you do these things, they all add up. I mean, painting a house is not cheap. Replacing flooring in a house is not cheap. So, you can do anything from painting all the way down to a really major renovation, but you just have to be sure that you're mindful of the fact that you can do almost anything and what that means. I also have heard, we were talking about renovation loans. One of the agents that I do a lot of business with said that you can actually do some sort of marketing through one of your, it's called design. Have you ever heard of that?
Yeah.
Command?
Yeah.
Yeah.
So, the slide that I first had up here, where it took a kitchen as is and made it into something that would be on HGTV. So I've heard that you guys have access to that kind of marketing. So if you had a specific listing or a house in mind, you could actually go through that system. I guess it's part of Command, and be able to create before and afters.
Wow.
One of the agents I've known for a lot of years, she said she's done that before inside of that system. She said that system costs $100 a month to do. I don't know if that's worth it or not. I don't know how much of this you guys would do if the cost would be justified by the value. But that, in my mind, is extremely powerful because it's so hard for people to envision what something's going to be. Do you agree with that?
Yes.
And so sometimes we have to show, if it's our house, if it's your listing in particular, and you really want it to sell, if you're able to do some marketing pieces before and after of the kitchen and of the master bathroom and showing what the house would look like with gorgeous floors, that would be extremely powerful because you're able to show someone instead of expecting them to visualize it. And it's a lot more likely in my mind at that point to happen. Do you agree? Okay. So I have never seen that system, but one of your fellow agents at Keller Williams in Northern Virginia told me that they use it all the time and they have a tremendous amount of success with it. So if you're interested in doing something a little bit more further or having some sort of a specialty, that might be something you want to look into.
Who is that? So we can reach out and find out what program that is.
Stacy Martin.
Thank
you. She is.
Was it Box Brown?
She's out of Manassas.
Okay, thanks.
So she won't care. Patrice, I'll send you her cell.
Pardon?
I'll share her
Okay,
contact with
thank
you.
you. I'd like to find out in case the agents want to know. It's nice to know that.
Yeah, we were doing this class up there and she mentioned that and I was just blown away. That might also be something that software is available in lots of different places and maybe even for cheaper. I have no idea, but that might be something that we look into. Because if you guys can't do it, we could do it. If you have a specific house in mind, yeah. Okay. But we can do recreation rooms, swimming pools, accessory units. We can take a 1 unit and turn it into a 2 or 3 or 4. 4 is the most for any residential loan, so don't ever forget that. If it's more than 4 units, it is not eligible for residential mortgage, and we can't help you, and no mortgage company can. At that point, it becomes a commercial loan. Okay. We personally don't, but I don't know if you know, F as in Frank, V as in Victor, C as in Cat, FBC Bank. They own 20% of Atlantic Coast Mortgage. In Northern Virginia, they're one of the favorite commercial lenders. So that's not something I can do, but I could put you in touch with them. And they would be more than happy to help you. And actually, Ed Martin, who does a lot of commercial, that is Stacy's husband, that we talked about a minute ago.
Okay.
And he's the one that told me actually that FBC Bank is his favorite. So I feel comfortable giving you that recommendation since he uses them all the time. Okay?
We'll just have to see if they do this territory down there.
Yeah. Well, I don't think they have, yes, it is a different market. But FBC has branches, I think, if not here, close to here, so they may be familiar. We'll find out. Thank you. Okay, sure.
If you have a 4-unit place, do you have to reside in one?
Yes, ma'am.
Okay.
If you're going to do primary residence financing, you do, which is a lot cheaper. Okay, you can purchase something as an investment property that's a multi-unit, but it's going to be a much higher rate, and you're going to be required to put a lot more money down. So if someone's willing to live in one of the units, at least for a period of time, that's going to be a much wiser move financially.
What if you have like a vehicle house asset account? Or
No, ma'am.
it's got to be put as the occupancy?
Yes, ma'am. And whoever's on the note, that's the key, right? Whoever's on the note.
Don't check, just kidding.
Sometimes, back in the REO days, they actually did every once in a while, but not anymore. Yeah,
It's not a
exactly.
branch. There's not a branch down here.
So you mean the guy that was taking pictures the other day of my house? It's great.
So the one point that was added to the loan, is that on the whole loan or just on the portion?
That's on the whole loan. Yes, and that's actually not added to the loan. That's a closing cost that has to be paid at closing. Okay, you're very welcome.
Is the interest rate the same?
On renovation, it's a quarter more. It's a quarter more on average. It's a quarter more.
For the life of the loan.
Yes.
So you're looking at 6.75 versus 6.5. Okay.
Yes, ma'am. If they wanted to and you had seller concession, you could buy it down to be the same.
Right. Okay.
Buy it down to be the same.
And what did you already tell us what the cost of buying down the rate is?
It's 1% of the loan
Oh, that's
amount.
right. I knew that. Okay.
1% of the loan amount. Nope, you're good. Yep. Anything else on this before we keep going? Want to make sure that we get out on time and I'm respectful of everybody's schedule. Okay. Okay, so here are some of the additional fees that we can also include in the renovation budget. Okay, these are expenses that most people don't think of until they actually sit down with a contractor. Some of these expenses are really expensive. Okay, architectural fees are one of them. They can be really expensive. If you have a large parcel of land that somebody wants to work with, survey costs could be very high. There are other things here that most people don't think of. And also they can include 6 months of payments, of monthly payment reserves, if the borrower needs to live somewhere else during the time of construction. That's pretty cool. So, you know, it's hard because a lot of the construction is going on, or most of it, if not all of it, now that I think about it, is post-closing. So now they're paying the mortgage payment, right? So they get to skip a month, but now they're starting to make the mortgage payment just as if they moved in the day of closing. And so sometimes people are really strapped because they're paying the mortgage payment, but they can't live there yet. So they have to have another place to live. And you would be surprised how many people take advantage of this because they have to have some help affording some short-term housing before their house is done and they can move in. Make sense?
And all these extra costs are factored into that.
It can be, if it's applicable. If it's required, we can factor it into the reno budget and they can borrow it.
But again, they have to qualify for that.
Yes, ma'am. Yes, ma'am. You know, even though rates are higher, and even though prices of homes are much higher and have been rising over the last, well, since before COVID, you would be surprised how many people have room in the budget between what they actually want to spend and what they qualify for. Okay, there are a lot of people, as a matter of fact, the majority, that qualify for more than what they are willing to spend. You're saying, yes, they just naturally, somebody that's really, I don't want to say financially aware, but somebody that's just conservative and just doesn't want to be, I get that all the time. Buyers say, I don't want to be house poor, right? I don't want to be this, I don't want to be that. So you would be surprised how many people can add in a renovation budget. It's very doable in most cases, okay?
Could you tell us if there was a minimum on the conventional?
There is, I don't think there is, right? There's only a minimum on the FHA. On the streamlined 203K, it's a minimum of 5,000.
Okay.
I don't believe there's a minimum on the conventional.
I mean, I'm starting to think, why wouldn't you pitch this to all your clients? Because like most houses that people buy, they're gonna spend $5,000 to $10,000 getting things tuned up, you know? It's like,
And if they can easily, yeah, and if they can easily afford that, that's great.
Garage, like, you know,
Sure.
coming out of pocket versus just financing it, like,
Yes.
and the 1% fee you guys are charging, you could get as a seller concession, and the 0.25 on the interest rate, this isn't enough to even make a difference.
As rates go down next year,
Right.
it'll be less and less significant as well,
Yeah.
right? Because rates are going down in 2024 and on even into 2025. You know, God willing, and the creek doesn't rise, right? Okay, all right, so we're getting somewhere, we're almost done. So this is a different list on 203K FHA, okay? The list of things that are allowed inside of the 203K is not as extensive as it is on a conventional loan. So these are some of the things that we use a 203K loan for. And I just wanted to make sure that you guys were aware that this list is a little bit more restrictive than what we can do on a conventional side, okay? And again, not that I'm trying to turn you guys into loan officers. There's not like a quiz later on this stuff. You don't have to memorize it all, but just be aware that it's different. So that if we have a situation that we can make sure that we're aware enough that we can engage in a conversation, okay?
You said these are not, those were not.
These are improvements that you can do.
Can.
Yes, ma'am, can do on a 2 or 3K, okay? Okay. You know, a lot of things like this, like home, like solar, I've had clients use this. I'm not 100% sure though that the cost is justified by the value with solar. They are mega bucks. And they save money and become, yeah, in the long run, but because they're so expensive, and then if you borrowed it in your mortgage, you're paying interest on it and additional fees to be able to do that. I'm not quite sure the cost is justified by the value. I don't know how you guys feel about that, but and one thing to point out on 203K is they don't install a new pool, but if there's an existing pool, you can include renovating it. Okay? And 203K, by the way, is only primary residences. Okay? Because it's an FHA loan. You can only do FHA with primary residence. FHA, VA, USDA, they don't allow second home and investors. Okay? Okay. All right, so the appraisal process. We already talked about this before, but I want to just reiterate that we have one appraisal and two values, right? So we have our contract price value, so that has to be validated. And then we have our renovation budget that's coming in. We're going to marry that with the contract. And then we're looking for the appraiser to say, yep, if all these things are done exactly the way you've described them, it's going to be worth X. Because ultimately, that's the appraised value the lender is lending from. That's where all the LTVs are figured, where the down payment is figured, the percentages and so on. Just to be clear.
Is there an LTV percentage that has to be followed? Does the lender want to see a specific?
The renovation budget on home style, just the renovation budget is not supposed to exceed 75% of the end value. You would almost never get there.
Yeah, that would be hard.
So there is one to answer your question, but that would almost never comes into play.
Okay.
The only LTV you have to worry about is the loan program LTV. So if someone's putting 5% down, it's got to be 95%, right?
Got it.
If someone's putting 3% down, it's got to be 97%.
Okay.
Okay. All right. Do you guys have any questions on this before I roll forward? No? Okay. Okay, so here's some of the things that go on at closing. It is a little bit different because, like I said, we close and then the work is done. At closing, if you have a contract, the seller's going to get paid, they're going to get their money, they're gone. The contractor, depending on the loan, he's going to either follow the draw schedule and the very first draw gets paid to him at closing. Or if it's a home style, we're going to give him 25% of the materials. He's going to do the work and then we're going to pay him the rest once we make sure the work is satisfactory. Okay? Post-closing. So each loan is going to have a little bit different process post-closing, but all in all, we make sure that everyone gets on a conference call before we go to closing to make sure that everybody's good with the process. Okay? We don't want to have any surprises. We've already done all this. Oh, by the way, I just want to mention, when we do renovation loans, we can do extended locks. Okay, so I don't know if you guys are familiar with how interest rates work, but the longer you lock the rate for, the more expensive the rate is. Okay, and I don't know if that might be a handy thing for some of the newer agents in here to know, because if you're writing just a regular contract and it's not a renovation, if your buyer closes inside of 30 days, the rate's going to be cheaper than if we need a 45-day, a 60-day, a 90-day, and so on. Okay, so sometimes it makes sense for us to do a faster closing and try to negotiate a rent back if we need more time, because it will save that buyer. Imagine how much an eighth or a quarter of a percent is over 30 years, right? So a rent back is definitely sometimes a lot cheaper than just pushing out the closing date, which is easier for everyone. So we have to communicate that with each other. But when you talk about renovation loans or construction loans, we can do a year lock. On a renovation, we don't really like to do that, because there's upfront fees involved. The lock is very expensive. But at some point when you do a long-term lock, if the program is eligible for it, we can float them down one time their market rate for free. So we qualify them at a much higher rate than what they actually spend at the end. That doesn't happen unless you do a one-time close or a two-time close. The 203K streamline and the home style conventional loan, we don't need to lock that long. These are regular loans that are going like this, just like a traditional transaction would be. And all the construction, like we mentioned before, is going on post-closing. So we don't have to worry about the lock period covering that. Okay. Some of this stuff is too detailed, nobody cares. I mean, we care, but I don't have to take your time. You don't need to care. Okay. All right, so any takeaways from this that I would suggest is just please try to keep this in mind. I would much rather work with a buyer to do a renovation loan on a house that they're not competing with 5, 10, 15, 20 other people. If that's possible, we can sell a home, we can make somebody happy, we can serve our community, and we can turn them into homeowners with this loan program, which is really something special. Also keep in mind on the listing side, this can certainly come in handy if you want to suggest to your buyers to do the work, get them some more money. We're happy to refinance it, include the repairs, and then you guys can list a gorgeous house for sale and hopefully rent it up. So whichever end of the spectrum you would like to be on, certainly I hope you keep Todd in mind for that because we would love to help you. Okay, do you guys have any final questions? Yes, ma'am.
Just a, say it correctly. Okay, suggest to a seller to refinance for 2 or 3 days?
Yes, ma'am.
Oh.
And the home style conventional. It doesn't have to be an FHA loan. We can do a conventional refinance. It includes the renovations it takes to get the household for a higher number.
But they still need to,
They would have to, well, no, if it's a refi, we're just working with the equity in the house. They don't need anything.
Right.
Mhm.
the other question I had is, what's your time frame between,
So with the renovation piece, we would love to have 45 days. Okay? I've done them in 20, but that's like,
everybody has 4?
everybody, what I call, everybody has to put your running shoes on, right? I start telling the buyer, where's the contractor? We don't have one. Okay, well, here's right here, call right now, let's go. Like, everybody has to put their running shoes on. You know, we've done them fast, but I'll be honest with you, because there's some additional moving parts that gets very stressful for the buyers and the sellers. And we want them to come back to us because the name of the game for all of our businesses is referral business. So we just, trying to balance out how fast we need to go to make it happen, and at the same time, not put unnecessary pressure on the parties is always a little bit of a trick there, but we're pretty good at it, so. Okay, yes, ma'am.
I had 2 questions. I know you said that the borrower can choose their own contractor.
Yes.
Are they limited to class A, class B, manufacturing?
Okay, so that's going to be determined by the size and scope of the job. Because if it's in the state of Virginia, based on the number that they're allowed or their certification allows them to do, we can't hire like a class C person or class C person for a $50,000 job. They have to carry the right certification.
Right, but if
Yeah, okay.
and the other was, you said that the loan for primary residence, were you speaking of a reno in general or one in particular?
Just one, just FHA.
Thank you.
Yes, the 2 or 3K streamline and the 2 or 3K reno can only be primary residence. Everything else can be all 3. Primary, secondary, and investor. Okay. Somebody else had their hand up over here. Sir, was that you? Of course. Yeah, of course we can. I think we also have some pretty significant marketing materials to support this. Amanda was just sitting here a minute ago, and I think she had to, there she is right there. She is our business development manager, and she actually lives here in Richmond. Okay, so let me introduce you guys to her because she can help you. She can come here to the market center and help you alongside of Todd.
I'm making things go off.
That's okay.
Is that in your pocket?
You know what? I lost my phone. So I picked up Amanda's phone instead of my phone. I apologize.
So obviously the seller doesn't have to worry about it.
That's right. That's right. Okay, so I just wanted to introduce you.
Yeah.
We were talking about marketing materials that are available to
Perfect
support.
timing.
Yes,
Yeah.
that's right. This is Amanda. She is part of our business development team. She is part of Todd's team and Gina's team, and she actually resides in Richmond. So it's very rare when you have a big mortgage company like us that has all kinds of tools and resources to actually have them local to you to use, very similar to what we experience at the corporate office, which is great. But Amanda actually can provide an awful lot of marketing materials to support this loan and any other loan we have. So I just wanted you guys to be able to put a name with the face.
Nice.
Okay?
Nice to meet you.
Okay. Anything else? Yes, ma'am. Yes, ma'am. Amanda. She's asking about
Do
marketing.
y'all also provide flyers for open houses or just?
Absolutely. Lots of different ones. So we can do buy down flyers, renovation flyers. I think this group is in rate plug. I can't remember. If not, we should be. But that's actually even easier. Yeah, so we have a couple of different marketing arms, but you can do them now, even property specific buy downs if you guys want to do that. We can do almost anything you would like. Sure. And this young lady makes all that happen.
Don't let me do it.
Well, the numbers part, yes, but everything else.
Okay, and don't forget to, well, if you came in a little bit late, please know that we have food in the kitchen and a lot of it, so you can help yourself. It's from Panera today, so if you guys would like to have a sandwich, please help yourself. I do have a raffle. Can I take this off?
Stop the recording, Robbie.
I'm sorry.